And good afternoon. Welcome into Market Talk on this Monday, March 14th. Thank you so much for joining us, making us part of your day. Once again, I'm your host, Jesse Allen. Again, thank you for joining us here as we kick off a new week. Find us online, markettalkag.com. That is our home on the web. Markettalkag.com is where you can find us. Facebook, Twitter, Instagram, all of our streaming sources, and much more. It's all there, markettalkag.com. Well, we have plenty to discuss today in the markets. Another volatile day in the grains and a really strong day in the cattle market. Joining us, our good friend John Heinberg with Total Farm Marketing here today. John, good afternoon to you, sir, and hope you had a great weekend. How are you?
Doing well, doing well. Looking forward to maybe some spring weather finally up here in Wisconsin this week.
Yeah, I hear you there. I'm looking forward to some basketball. My Iowa Hawkeyes won the Big Ten, so I know they're in the same bracket I think is Wisconsin. I can't remember, or same side anyway. I can't remember. Either way, I'm looking forward to some March Madness this week. Maybe get my mind off these markets.
Yeah, and it'll get some madness to go with our madness, basically in that
Exactly.
regard. So, but
Exactly.
yeah, we got you obviously cheering for Bucky Red here for being from Wisconsin as we get ready to play this week.
We'll see how that all shakes out. But of course, let's talk the market trade. And, it was a volatile day in the grains again. Let's start, though, with the cattle market. I want to move livestock up to the front to talk here today because very strong day in live and feeder cattle trade. What are your thoughts there on this Monday, John?
Yeah, heck of a price breakout today in those cattle markets. Maybe that was fueled by the weakness in the grains on the overnight. To me, actually, the one thing that was very surprising last week, as ugly as that week felt last week, we still finished higher in live and feeder cattle week over week. Just quite a ways off the highs of the week, but at least still we saw a little bit of a trend. Maybe that triggered some money flow in today, and maybe some optimism that cash markets might turn around. Obviously these weather forecasts, we're starting to see some warmth building on the eastern part of the nation, and that could trigger that potential grilling demand that's right around the corner. Also just the fact that cattle market looks undervalued here, given the numbers. We saw production down again last week overall in terms of beef in the cooler. So there's just this opportunity. I think this market just maybe finally found some value buying. Now, one day does not make a rally, and one day does not make a turn. So we'll have to see how things kind of trade out. If the grain markets wake back up again tomorrow, what happens to that feeder market? What happens to that live cattle market? Cash trade hasn't been exactly exciting the last 2 weeks, and doggone disappointing last week. We're still down to 137 on cash as I keep allow April to stay at 140. So we'll have to see how those things shake out. But at least at this point, a nice little turn. And some of these charts got some interesting patterns in them. I'm looking at that October chart today. Do we have an inverted head and shoulders starting to build there? And if that does come through, that puts us maybe into those low 150s. Maybe given the supply, the demand that could be down there longer term, and the supply of the cattle, that might not be a horrible target to look at.
Very, very true. Well, I think as well, whether you're talking beef or pork, yes, we have a lot of concerns about gas prices and a lot of the restaurant demand maybe waning, et cetera, et cetera. People not spending a whole lot of money. But I know you and I were talking a little bit. There's still a lot of disposable income out there. And even though we might be buying cheaper cuts of beef, we're still buying beef, John.
Yeah, that's still one thing that's out there. First off, just the overall meat supply is still thin in that regard. And, a lot of people put money in the bank, in this window that we had here, whether it's from the COVID payments, just making sure we build that nest egg up. And you go look at saved, cash flow that or income that's out there. It's actually at a multi-year high. So that means there's at least a little bit of money out there. And, one area that we take a look at 90% beef trim and the price of that right now, it's trading well above 5-year averages, well above the last 2 years. So we're seeing some demand, like you just said, maybe in those cheaper cuts, but we're still moving product overall. And that just builds a base underneath this market for the packer that they can go ahead and bid up. Now, like I said, if we get the grilling season in play here pretty soon, then we'll start seeing some of that demand maybe shift into those higher price cuts, which truly is a driver of price. But at least knowing that we've got some of that trim working at those levels, that could help support the bottom side of this market, maybe keep a floor underneath us.
Hog market today, staying on the livestock train here, real quick. I was happy with the way hogs finished the day, kind of maybe getting a little strength from the cattle market, but for the most part, we were higher except front month April and a few of those far, far deferred contracts today.
Yeah, still got that April contract consolidation mode still going there as we basically have been building a wedge pattern since we kind of broke down here in the at the first part of the month. We'll see what happens there. You got the index down below us, a couple points down, so that keeps a little bit of pressure on those front months. So we'll have to again see how that plays out. Does the cash market strength continue to lift this market up? So maybe got a break coming there. Wouldn't shock me. We see a break on that April hog down to that 97 window, just maybe on a technical side of things, maybe before we find some footing. But let's go look at June. There's the push last week, busted through the downtrend that we were kind of building there on Friday last week with that strong update. Got some good follow through today. Again, carcasses were strong at midday today. So that demand is out there. Pork production in terms of slaughter pace so far for the year, we're about 7.5% in terms of total pounds over versus last year. That's reflective of the lack of hogs that were out there. And again, we still got a lot of demand in this market. So that's going to keep this market supported. Feels like those summer months might be getting poised to make another run towards that contract high or even that trend line working over top, which is in those low 120s for June.
All right, John, let's segue over to the grain markets here today. Another volatile session. Wheat markets traded a pretty wide range, especially Chicago wheat today. And we ended up kind of finishing back off our session highs there in wheat. I would just call it a mixed to firm day. What are your thoughts here? I know we got the rumors out there of Russia banning wheat exports starting tomorrow. It just seemed like that was maybe one of the main reasons why wheat was kind of all over the place today. Just a lot of rumors out there in the trade.
Yeah, that was part of the wheat market as well as just in grain markets in general. First off, today was the last day for March to trade. I think that has something to do with the weakness that we saw in the grain markets overall. If you look where the March contracts finished out, saw a little bit of negative pressure that just trickled through the grain complex as well. That talk of what's Russia may, let's put the key word there, may limit exports maybe relatively soon, all the way through June. That did provide a little early morning support, but you still got a market with a lot of volatility in it, starting to maybe build a little bit of base here. We'll have to kind of watch the pattern that we're forming. Looks like a little bit of a bear flag starting to form. 2 days now, we got a series of higher highs, lower and higher lows, kind of building that backfill. Sometimes those like to break lower. We can possibly see that. We still got to keep an eye on U.S. weather. What's going to happen here with that winter wheat crop as we're getting closer and closer to that thing coming out of dormancy and the dry conditions that go there. The biggest thing too, export inspections today for U.S. wheat were pretty dismal, a couple 100,000 metric tons, just not where we need to be, especially if we're counting on some more extra demand coming into the market. So a lot of moving pieces there, and throw the money flow into that wheat market overall, which did move it quickly to a long position, obviously, with that explosion in price. Maybe we're seeing some squaring up there, and that's why the market stays so choppy.
Staying on the weekly export inspections, how about quarter beans? What'd you see there today?
Corn number continues to be solid. So does the bean numbers in this window. We're starting to see corn pick up a little bit more as we get, a little further into that main window. The key for me is still going, where is going to that bean number going to go? Typically is the area that we start seeing things tail off and drop off at this time frame. Now, one thing that we're kind of watching is about what's the shipping pace like in Brazil and South America. There we saw a little bit of a ramp up in the corn exports versus soybean exports, which is atypical this time of year. So that may be just a sign that those beans aren't there, or they're keeping them in house, which we've seen it in the export sales numbers and things of that nature for soybeans right now, that the global marketplace has been looking for those U.S. beans. And realistically, with these export potentials coming together in terms of one country or another limiting those exports, even though some of them aren't major shippers, that's only going to leave one store open realistically in the corn export market, and that's going to be the United States.
On the soybean side as well here today, I know we have those rumors out there started Sunday about Argentina with soybean meal, soy oil exports. I'm hearing the one camp saying, this is just a, 24, 48-hour thing. They'll bump up the tax a little bit and then they come back online. I know you're hearing some other chatter about that situation. So it just feels like with all the talk out there, that really is an interesting side note to the soy market here today.
It could be one of those where there's smoke, there's fire type mentalities. Is Obviously we've got a limited crop in that region of the world because of the weather. Maybe more of the bean crop is going to get used internally between Argentina and Paraguay and Brazil versus go to the export market. So need to watch that trend line in terms of what could be happening with those news items. Obviously Argentina is the world's largest exporter of soybean meal. Then you throw the Ukraine in; they're actually number 4 in oilseed meal exports with sunflower oil meal. So that tightens up that market pretty quickly. As we've seen, and even today, we had good strength in that soybean meal market despite the negative tone overall in beans in general today. And that was probably more led by the strong sell off in soybean oil, led by a weaker crude oil market today. But so that's something that's out there. Plus, you're also hearing whispers that they may be looking to double that export tax. Again, those are rumors, unconfirmed, but watch the headlines and see what comes out of it. If they're at that stage where they want to really lock down the export market, that's only going to be more beneficial to those U.S. beans.
Well, you mentioned the crude oil market as well a couple times here, kind of weakening, and we're seeing that back down around $100 a barrel. I mean, compared to where we were, it's a good thing, but we're still $100 a barrel crude oil, so we got to take that into account. I know folks are wondering, are our gas prices going to come back down, et cetera, et cetera. I mean, $100 a barrel crude oil, I don't necessarily see that. I don't see diesel prices coming down. I mean, what's your thoughts with where this crude oil market is at right now, John?
On the charts is probably an area we can find a little bit of support. We've had a pretty good recovery. Obviously, April trading to 130 down to, sub 100 today, or touching the 100 level before finding some footing. You look at, that's an area, like I said, we got some moving average support here around that 20-day moving average. Might be a spot. Now we've found a range. Maybe we ping pong back and forth based on the headlines in between. Again, that's going to stay out there and it's going to stay valued. Obviously, we've got concerns with the, global trade, where things are in terms of what supplies are available, to the world. Uh, Today, we got some pressure because of the flare up of COVID in China, locking down one of the key port cities. So, does that slow down some demand concerns in that regard? So, that brings a little bit more pressure into the market. Plus, obviously, what's happening in terms of supply side between OPEC nations and Russian oil and everything else that's coming into play. So, right now, maybe we're at a point we've priced in as much of the bad news as we can, barring anything else popping up, that maybe this market finds a little stability. That sends ripple effects all the way through the grain markets. Obviously, the relationship with soybean oil, the tie to ethanol and corn, as well as even the DDG's price that comes off those ethanol bushels or that ethanol usage. So there's a lot of moving parts there. And if we get some stability in crude oil, that will just probably allow the grain markets to settle back in, take a breath, and continue to look at the demand side of the equation, which maybe we're moving to a bit of more of a demand market there in those grains versus a concern about supply, that we've been really dealing with as we've had the blow up in the terms of the Ukrainian and Russian war.
Very, very true. Well, I wonder as well with this grain market here, just kind of wrapping up, obviously watching the demand side, obviously watching our weather though as well. You alluded to the US weather. I mean, it's March 14th. We're not far off from really seeing tractors and planters roll across the Midwest, and we still have, west of the Mississippi River, there's a lot of orange, yellow, red, and dark red, brown on that screen with that drought monitor. And I know, the old adage, plant in the dust, the bins will bust. But I know there's a lot of worry. I heard a lot of this in New Orleans last week from farmers that, hey, we can get a crop in the ground, but we need rain. And I'm wondering if you're hearing the same thing.
We are, and that's something that we've been talking about with producers and keeping an eye on ourselves too. Is we got those southwestern plains, we got a lot of weather concerns and dryness on those maps. Does that start spreading north and east as we get into the planting window? Well, how that's going to react on the market. First off, if planting goes well, we get these acres in, which we haven't even touched on that, which is going to be coming up over these next 2 weeks is the acre battle. But if we start getting the planters rolling, that'll pressure the crop, prices overall, just because the anticipation that we're going to get this crop in the ground. Then we'll sit back and we'll focus on what the weather's showing us in that regard and start building some premium in. I go look at some of these prices. You look at the lack of carry in the market, the gap between July and September corn, or July to August beans. And, if we have a weather card that's out there, that might be a window that you're looking at reownership to take advantage of that spread that's between the two, even though it's kind of old crop, new crop mentality. But there's some definite things out there that may provide some opportunity that we need to just have in front of us going forward. because if we do see any hiccups starting to come into this market whatsoever, given the demand, the strength that we move products so far this spring, all of a sudden we get the midsummer, and if things are looking kind of tough, we're going to see some premium move into those back months, starting with that September and that August contract pretty quickly.
John, as well, I see on the dairy markets a little more green on the screen again here today. What are your thoughts there as we start the week?
Again, solid market in terms of how it's been trading. Again, cheese prices continue to get support. I think I mentioned butter last week and the strength in that edible oil market spilling over into butter. Prices are going to keep this milk market elevated even as we're moving into the spring flush window here. Still a lot of great opportunity. If you're a producer and ability to lock in $23 to $24 all the way through next year, sounds like a great opportunity, even though input costs are still going to stay high. But again, it's still one of those markets that's thinly traded, and if something changes and makes the money want to move to the short side, you can see prices come down extremely quickly. So for dairy producers, make sure you're staying on top of things. Keep the flexibility in the market for the upside, but make sure you're starting to protect that downside that's in front of you.
John, great stuff as always. Any final thoughts you have for us on this Monday?
Like always, it's all going to come down to volatility. Now we got to throw the Fed meeting in here this week and what possibly happens there. Keep an eye on that equity market. A little bit of a rebound today, but just couldn't hold those gains. Still makes me a little cautious of where that market might end up. If we see a hard break there, the money seems to be jumping back and forth pretty quickly some days between the equity markets and commodities. That might be another trigger that we get another leg higher in that commodity market if equities were to break.
Well, John, as always, if folks need some advice, I know they can reach out to you and the Total Farm marketing team very easily. What's the best way to do that?
Sure, love chat with them anytime. Feel free to give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And again, don't forget about our website, totalfarmmarketing.com. A lot of great information. Trials to our daily newsletter are out there for you as well. Take a look at those resources and take advantage of them.
Well, John, appreciate the time as always, sir. Have a great rest of the week, and we'll talk to you again next week.
Sounds good. Have a great week, everybody.
John Heinberg with Total Farm Marketing, our guest today on Market Talk. That's going to do it for the show this week. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.